Recording. Cool. All right, let's go. Hey everyone, this is Jim Ross from the Self Storage Show. We're recording another episode here as part of the Meetup Mondays that we do, where we do a live podcast recording with the people that come on Mondays and attend. It's fun. We come on to a podcast recording, and after that, we have like an open networking session. So kind of best of both worlds when it comes to that kind of stuff.
Yep.
And got a recurring guest with me today. Got Matt Van Horn with me. What's going on, Matt?
No, not much. How about you?
Good. So you shouldn't be like a special guest. You're just like a co-host at this point now. So that's just,
in some ways,
that's pretty much how it goes. And again, when it comes to these recordings, a lot of times, we talk about operations, we're talking about marketing and finance and things like that. But sometimes, there's news that hits the self-storage world. I'm like, all right, this is too big. We got to talk about this. And I just thought it was a part of your newsletter, obviously talking about the Extra Space buying out live storage. So that's too huge. We got to talk about this.
Yeah, it's interesting. All right. I mean, it's amazing what a week or a couple of weeks will do, where public was basically going into it and they put in an offer for life and they were going to go hostile. And then all of a sudden, Extra Space kind of came in there and picked public's pocket and they made a deal. So it was.
It wasn't a long ago, right? When the public was in the news trying to buy it. It seemed like it was just a month or so.
Well, I mean, it looked like from everything I had read, it started in about December. They had sent the Life Board an offer, which they rejected. So public decided that it was going to go hostile and try to take them over that way, which public has a history of doing when you look at ShareGuard and at least one other player. Yeah. So, and if you looked at, we did some analysis on it in the newsletter, and you looked at some of the institutional investors that owned both Life and public, it seemed like a pretty good deal. It was about those same institutional investors that own part of public were also like 48% owners of Life. So it seemed like, okay, if you're going to go hostile and you need to take it over that way, it's a pretty, the table is pretty well set. Well, of course, most companies don't like to be hostilely taken over that way. That's why they call it hostile. And so it looks like Life Storage probably floated something behind the scenes and came to a deal with Extra Space, and it changes the landscape dramatically.
Because, for people that aren't in the context, what does that put them in position now as far as like number of stores?
Well, it seems to be jumping around a little bit depending on where you're reading the numbers from. But overall, it looks like in terms of locations and in terms of square footage, Extra Space is now going to be bigger than public. It's Life is basically going to disappear and get folded into Extra Space. There's a stock deal going on with that with existing shareholders for Life, and that will all get worked out. But the combined company, I'd read a couple different things, but even as of the 2023 REIT presentation that Extra Space had, in terms of square footage, they gave public about 10% of the market, and then Extra Space at about 8.7, Life at about 4.2. Now there's, basically I read an article in Motley Fool. They were talking about now that's going to be Extra Space will be 13% of all self-storage square footage, and I think over 3,500 locations now, something to that effect. So it's definitely it's going to change the landscape dramatically, particularly with the Wall Street analysts. Now instead of public continuing to be the Godzilla of the market, you now have a competitor. And again, these numbers keep moving around in terms of who's bigger, but if anything, a competitor on the exact same footing that you are. And you're going to be judged. They're both going to be judged in that way. I mean, public was always bigger. So the size kind of gave it that advantage in terms of, even when I saw how the analysts dealt with them. But now you've allowed a competitor to come in, and instead of becoming putting yourself in almost an unassailable position in size, you've now created a competitor that's as large, as well equipped, as well funded, and as smart, if not smarter than you, in terms of how they run things. Now, for all of us who run independent operators, this isn't good at all, really. I think it's worse than the other way around.
That's why. Yeah, I'm curious. Why do you think that's honestly, that's who's listening to this. They're average Joes with mom and pops or small portfolios. Why should they care when it comes to this?
Well, I think it's always nice to have another competitor, especially when you're smaller. And Joel Margrellis, the CEO of Extra Space, made the comment in terms of in self-storage, scale matters, and it absolutely does.
Yeah.
So giving a company like that even more scale is, rough in that sense. I mean, it just makes them bigger. But in terms of, revenue management, now there's a lot more data coming into that, a lot more adjustments they can make. They're going to have a field day with that data. So we're going to be, there's going to be a lot more competition in terms of rate management. And then if you're public too, you basically just lost out on a big deal. And that could actually, reinvigorate their operations, because now they do have to gear up and compete with a competitor that's just as large now. You can't kind of skate around on some stuff due to your size. Now you're going to be judged on equal footing now.
That's exactly what I was thinking of. That's no longer, not that they were skating by, but they were,
right.
Like I said, they were the big gorillas. They were like, it's all good, kind of coasting along, not kind of getting the kick in the ass from with this public and life buyout. They're going to have to step up their game too. So that's going to be.
They're going to, absolutely. Their ops and everything are going to have to. Yeah, it's going to be an interesting thing on how it works, because again, they are going to be judged accordingly. The two of them now, it was always, okay, well, this is the largest one, this is the second largest one, and then you had Cuban Life kind of flip-flop in that position. Then you had U-Haul kind of in the background, not technically a REIT, but square footage wise up there, but they don't necessarily manage the way we do.
Yeah. Now
you've got two really large competitors that are going to be going at it, and they're going to be judged on equal footing, I would think. So there's no free passes on that one anymore.
It's gonna be fun to watch. I guess, again, a lot of times what I do for my clients, you probably do the same thing. We're always watching the big boys, because frankly, I'm not saying we steal a lot from the boys, but they're like you said, with the data, they put everyone through the data. They know what works and what kind of rate increase structure is working the best for them, because they're testing it out for everywhere. Now they're going to have that data. I'm not saying look at it's a good thing, but the more data they have, I don't know. If you're listening to this, just keep watching. That's the thing, because these guys, they know what they're doing, frankly. And there's a lot of times you can kind of pick things up, what they're doing, and implement it in your own operations, especially like with the rate management stuff. But I'm just thinking more locations, and now it's more competition, more data in your area that you have to really keep an eye on, because they're going to get right now with this economy. It's going to be interesting to see what they're doing with pricing coming in right now.
With the algorithms they have now, again, giving them more data is not what I want to see. And then also, again, this is simple capitalism. More competition, there's more rate, conflict, things like that. You start condensing that down. Well, the rates there's not as much competition there that way, because you would think that, okay, well, there's less, maybe the rates will go up, and that's a possibility. What I'm more concerned on is them dropping more. The way that they're working the data and trying to figure out, okay, what's the optimal move-in price, and then what is the optimal rate increase in terms of get to where you want that average return or average price per square foot, average price per unit, whatever it is that you're looking at. And then, going it from a down perspective. And if they're all of a sudden undercutting you by 20%, but they have the algorithm in the background to make that difference up very quickly on rate increases, because they know who will stay, who will go, how long they will stay. This is where this data becomes important. Really it affects you on the movement, I think, is more than anything else.
Yeah, as I said, it's going to be very.
Those of you in lease up, that's a concern. It's a concern for me on properties that I'm dealing with that are in lease up, that I've got to watch these things and try to figure out exactly or somewhat what they're doing, and this doesn't make it easier.
No, I'm going to say that's kind of the bottom line with this. It's not going to. I won't say it's a good thing or a bad thing. It's not like you can control it at all. Anyway,
you can't control it.
Be very mindful of what's going on in your local market, because, whether you see it directly, it's affecting you one way or the other. And if it's not like directly now, it's coming very soon. It's going to trickle down to your location for sure.
Yeah, I mean, look, the more combination of competition like this, or the slimming down of our competition, it's not good for any of us. I mean, it gives them way more pricing power, way more data, and now you've got public and Extra Space together that probably control what now, 22% of the market, give or take.
Yeah, yeah.
I mean, that's a massive, massive chunk of the amount of square footage in this country. And, the consolidation as independent operators doesn't necessarily help us. But again, it's where the industry is going. We're being commoditized in a sense of, or corporatized, I guess is a better way of putting it. So now we're, going to have to compete with some of these things that probably weren't on the table, 5, 6, 7 years ago.
Mm-hmm. I always want to watch this when it comes to technology, frankly, to see now with this kind of a scale, if they're able to push the envelope more with technology, or I don't know. Is it easier when you have a smaller portfolio? I can kind of go back and forth with that.
Well, I mean, if you look at it from the largest aspect, I mean, if you're a very, very large company and you talk about operations, and you and I have been operations for over 2 decades now. The bigger your operation, the harder it is to make some of these changes, because it's like turning a battleship. But the one interesting thing about the Extra Space case is that they just acquired Storage Express at the end of last year, or they're finishing up that deal. Now they're moving right into this deal, which is amazing. And so they already have that kind of aspect that they're adding on to their operations to be able to put it in. And I think they're all testing it. I mean, I know Public's testing unmanned and remote locations and automated, and I know Extra Space has been. I'm sure Life and Cube have been as well. I haven't visited any of those locations, but I'm sure they're out there. This is just, I think, honestly, I think it gives Extra Space probably an advantage, a big advantage in this. But again, we'll see how it shakes out. But, less competition is not good for any of us. I mean, think about it from a marketing perspective. Way more power on Google pay-per-click and ads, website traffic, SEO, in terms of expenses, being able to consolidate expenses, which is one of the, the investors love in this deal, where it's going to streamline expenses. Scale matters, and it's coming.
Speaking of investors, wonder what that call is going to be like on the quarterly call for Public.
It's going to be a circus, I'm sure.
I want to listen to that one.
Yeah, I mean, it's bad for them. And I don't see how anybody looks at it any other way, except for the fact that you could say, okay, well, maybe, Public doesn't have to spend that money and acquire it. But if I'm Public, I probably wanted that square footage more than the money. Mm-hmm. Those deals tend to work out over the long term. And so, yeah, that's their, I mean, there's options for them too. I'm sure they could look at something else. I mean, CubeSmart's kind of floating out there. Maybe they'll go for that. Who knows? But yeah, it's going to be a fun call, and we should have those corporate calls in we finished March, so end of this month probably.
Yeah,
a few weeks. So right after, a couple weeks after ISS, it'll be interesting to see how that goes. But everybody kind of knows where the ball is now. The fun calls will also be the Extra Space calls to see what are their plans going forward, and that's what the analysts are going to want to know.
Okay, we gotta do a follow-up. That'd be kind of a fun follow-up. We haven't done that yet for a quarterly synopsis of those calls, because not many people want to listen to those kind of things. And I know you love geeking out on that kind of thing. So
I do. I like seeing what they're doing, and then it's more fun too to dig into their 10K reports and things, and look at what they're not talking about. So it's interesting all the way around. But yeah, they're going to be it's going to be a little bit of a circus this quarterly call, and then it will slow down. But it'll be interesting to see how Public responds, if there's anything that they do. Maybe they make a play for CubeSmart. I've heard nothing about that. I mean, if they were, we probably wouldn't. So we'll have to see. But it's this is a big change.
Big enough we had to talk about it for sure. Like I said, we'll continue the conversation on this as things kind of keep coming up. But definitely want to make sure it was on everyone's radar. Like I said, you're going to be affected one way or the other.
Yeah, keep an eye on it.
By this, so for sure. All right, thanks a lot, Matt. I'll talk to you soon.